Okay, here's a question for you. Can just one company, a single entity, really shape what we think, what we see, maybe even what we hear?
It sounds a bit like science fiction, doesn't it?
It really does. And what if I said the same company holds, well, significant sway over giants like Amazon, Google, Microsoft, Apple, Facebook? The list goes on.
Okay, now you've got my attention. Which company are we talking about?
We're talking about BlackRock, an asset management powerhouse. And today we're doing a deep dive into just how immense their influence really is. It's often unseen.
Immense is probably the right word. The scale is something else.
Right. To try and grasp it, just think about this. As of January 2022, BlackRock was managing $10 trillion in assets.
10 trillion. It's almost impossible to really picture that number.
Exactly. So let's try putting it into perspective for you. It's like 100 times the wealth of someone like Mukesh Ambani.
Wow.
It's nearly double the combined wealth of the top 100 richest people on the planet. You know, Musk, Bezos, Gates, all of them together.
Double all of them.
That's right.
Staggering.
And it's even about 3 times the entire annual GDP of a country like India.
Okay, so the scale is clearly enormous.
Absolutely. So our mission for this deep dive is basically to unpack who BlackRock is, how they got this powerful, and, the specific ways they actually exert this influence globally.
And the story really kicks off with Larry Fink, right? One of the co-founders.
Yeah, Larry Fink. His background's key here. He was in investment banking, specifically at First Boston.
And investment bankers, well, their job is essentially making these huge decisions about where vast sums of money should go. High-stakes stuff.
Very high stakes. And Fink learned a, let's say, foundational lesson there, a very expensive one.
Ah, the $90 million loss.
That's the one.
Yeah.
His department lost nearly $90 million for investors because they didn't manage risk properly, didn't allocate it correctly.
Ouch. That's more than just a financial hit.
Oh, absolutely.
Yeah.
It apparently sparked this huge rethink for Fink about how crucial risk management is, not just, minimizing loss, but strategically using risk to maximize profit.
And that intense focus on risk, that became BlackRock's sort of secret sauce, their differentiator.
So in 1988, Fink and 7 colleagues, highly skilled people from his old workplace, they founded BlackRock Financial Management.
With about $5 million in initial funding from Blackstone, interestingly. They started as an offshoot before becoming their own massive entity.
So at its heart, BlackRock is an asset management company. What does that actually mean in simple terms?
Well, it means clients could be individuals, big institutions, even governments. They give their money, their capital to BlackRock.
Right, trusting them with it.
Exactly. BlackRock then pools all this money together, huge pools of capital. And their experts invested strategically across all sorts of things: stocks, bonds, government securities, real estate, you name it.
The goal being, obviously, to make a return for those investors.
Precisely. To generate returns while, and this goes back to Fink's lesson, meticulously managing the risk involved.
And how does BlackRock make money from this?
They charge a small percentage fee on the assets they manage. It's often called an expense ratio.
Okay.
And that fee covers all their research, their analysis, the tech infrastructure, the expertise needed to handle these, vast and complex portfolios.
So unlike investing directly yourself, where you do all the homework.
Right. With BlackRock, you give them the capital, they handle the complex market stuff, and they aim to give you back profits minus their fee.
And it's not always just one big pot of money, is it? These funds can be specialized.
Oh, definitely. You have small cap funds, large cap, equity funds, even theme-based funds, like ones focused only on infrastructure, for example.
Okay, so knowing what they do, the big question is, how did they get so massive? How did that growth happen from those, relatively humble beginnings?
Well, their growth from '88 onwards was incredibly fast. A huge factor was that the founders were seasoned investment bankers. They really understood risk management deeply.
That core competency.
Exactly. And their relentless focus on cutting risk while still delivering strong profits. That naturally just pulled in more and more investors. Word gets around.
And this is where their sheer size starts to become real leverage, isn't it?
Absolutely. When you're managing funds on BlackRock's scale, your investment decisions just carry enormous weight.
Like if they decide to buy bonds from a company.
Precisely. If BlackRock decides to commit, say, $2 billion in one go to buy a company's bonds, they're in a position to negotiate a much better interest rate on that money than a smaller investor could.
Bargaining power.
Huge bargaining power. And that amplified return, it goes back to their investors. which makes BlackRock look even better, attracting even more capital.
Which it gives them even more leverage. It's a powerful cycle.
A very powerful, self-reinforcing cycle of growth and diversification.
And then they went public.
Yep, by 1999, they launched their IPO, met all the tough standards for public trading, making their shares available even to everyday retail investors.
But wasn't there something else, a kind of technological edge?
Yes. This was truly a game changer. A proprietary software they developed right back at the start in 1988. It's called Aladdin.
Aladdin. Sounds almost magical.
Well, in the financial world, it kind of was. Because BlackRock manages money for so many different people and institutions, they were constantly collecting this immense, unparalleled amount of financial data.
Right, just data pouring in constantly.
And Aladdin was built to crunch that data. It uses complex algorithms to try and predict the future success, the profitability of potential investments.
So like a crystal ball based on data.
In a way, yeah. This technological foresight wasn't just a small competitive edge, it was fundamental. It allowed them to navigate and even profit from really turbulent financial times.
Which must have massively contributed to their growth and reputation.
Immensely. Their global expansion, their consistent profits for investors. A lot of that is underpinned by Aladdin's capabilities.
And speaking of turbulent times, their ability to handle crises seems crucial too.
Oh, definitely. Look at the 2008 global financial crisis. The U.S. economy was on its knees, right?
A terrifying time for many.
Absolutely. Governments, banks, they were facing a massive liquidity crunch, basically, a shortage of available cash. But BlackRock, sitting on these huge pools of investor funds...
They had cash when others didn't.
Exactly. They were uniquely positioned. They made strategic deals with struggling banks, buying up assets at heavily discounted prices because they were confident the market would eventually recover.
So buying low during a panic.
And buying shares in collapsing companies in bulk. They essentially turned these distressed assets into huge profits when things bounced back.
Wow. And wasn't there a similar situation more recently during the pandemic?
Yes, in 2020, with COVID-19, the American government actually turned to BlackRock for help.
Government itself.
Yes, because they understood that BlackRock's funds, which by then were, double the GDP of many countries, needed to be deployed strategically to help stabilize the economy.
So BlackRock wasn't just surviving these crises.
They were capitalizing on them. They helped the government, yes, but they also strategically used these situations to generate significant profits for themselves and their clients. It really cemented their unique position.
That ability to not just weather the storm, but actually gain strength from it, it's quite something.
It really is.
Yeah.
And that strategic maneuvering kind of leads into their next big move. In 2020, after the tragic killing of George Floyd and the global Black Lives Matter protests that followed.
A major moment of social reckoning.
Huge. BlackRock initiated a really significant campaign promoting something called ESG scores.
ESG. Right. Environmental, social, and governance scores.
Exactly. It's basically a way to evaluate a company based on its commitment to environmental sustainability, how it handles social issues like inequality and diversity in its workforce, and the integrity of its internal governance and practices.
Now, some environmental rules have always been around for businesses, right? Basic compliance.
Sure, but BlackRock really pushed this specific measurable scoring system for these broader factors into the mainstream.
And this was a big shift.
It really was. Back in the early 2000s, ESG scores weren't a major focus for most investors. But post-2020, with BlackRock championing them, public perception shifted dramatically.
So things like social responsibility, being future ready, a company's goodwill, these became quantifiable.
Quantifiable and highly influential on investment decisions. Suddenly, these scores mattered a lot.
And what was the mechanism there? How did BlackRock make them matter?
Well, what's really interesting is that BlackRock and other asset managers too started creating specific investment funds or segments just for companies with high ESG scores.
Ah, so they created demand.
Precisely. This essentially forced companies to compete really hard to boost their ESG scores. They started pouring money into initiatives and adjusting their advertising, their whole public message, to showcase how socially responsible and green they were.
Okay, so on the surface, promoting environmental protection, equality, that sounds positive, right?
You'd initially think so, absolutely. But the source material we looked at points out what seems to be a significant tension within BlackRock's own investments.
How so?
Well, while they're promoting green energy and environmental protection through ESG, BlackRock is also highlighted as the largest asset management investor in the global oil and gas industry.
The largest, despite pushing green initiatives.
According to the source, yes. Over $200 billion invested in oil and gas. That's more than double Mukesh Ambani's entire wealth just within that one sector.
Hmm. That does seem contradictory.
And the source points out similar apparent contradictions elsewhere. For instance, BlackRock often speaks out against gun violence, which is a huge issue, especially in the U.S.
Yes, a very sensitive and important topic.
But at the same time, they're also listed as a substantial shareholder in major gun manufacturers. Companies like Sturm Ruger, Vista Outdoor, Smith & Wesson.
So, speaking against it while also invested in it.
The source highlights this as a seemingly inconsistent stance. Yeah. It's presented as a point of contention. We're just reporting what the sources say here, of course.
Understood. Okay, so bringing it all together, how does BlackRock actually use all this scale and influence globally?
Well, with that $10 trillion in assets under management again, as of Jan 2022, they are, quite simply, the biggest asset management firm on the planet.
And that colossal amount of money translates directly into ownership.
Huge ownership stakes in practically every major company you can think of across the globe.
We mentioned the tech giants earlier, Amazon, Apple, Facebook, Google, Intel, Microsoft.
But it's way beyond tech. Think pharmaceuticals, energy companies, big media conglomerates, major banks, even as we touched on the weapons industry.
So they're diversified everywhere.
Everywhere. This incredibly wide ownership across the world's most powerful corporations gives them this unparalleled level of influence across industries, across geographies.
And it's not just passive ownership, like they just sit back and collect dividends.
Not entirely. Think about the news you consume or what you see on social media. BlackRock holds significant investments in many of those very media outlets and platforms.
Okay, that's interesting.
Now, technically, these companies operate independently. But BlackRock, as a major shareholder, often has rights to, well, intervene in strategic decisions. They get invited to the big financial presentations.
So they have a seat at the table, or at least access.
Access, definitely. And think about the ESG scores again. The fact that those scores became so widespread, largely pushed by BlackRock, shows how they can subtly shape company behavior and maybe even public perception through the narratives put out in ads and news.
And the sheer power of their investment choices.
That must be huge.
Oh, immense. Imagine if BlackRock just decided, nope, we're not investing in company X. Just bypass them completely.
What would happen?
That company would almost certainly face a massive setback. In a market driven by supply and demand, a company not getting investment from the biggest player, it could easily be seen, maybe wrongly, as having a bleak future. Investor confidence could plummet. So their decision not to invest is powerful. What about when they do invest?
Given the absolutely colossal sums they manage, I mean, you'd struggle to type the number without getting the zeros wrong if they decide to buy shares in a company. That alone can trigger a surge in its stock price.
Because everyone else sees BlackRock moving in.
Exactly. It signals confidence. And the flip side is true, too. If they decide to sell off shares, divest, that can cause a significant dip.
Which raises questions about market stability, doesn't it?
The source does raise that point, yes. Having such huge stakes in so many companies and being able to buy and sell in such volume could potentially introduce instability into the wider market.
And with their reach, can they anticipate market moves?
Their extensive reach means they often have a very broad view. They might even be able to use financial data patterns from one company or sector they're invested in to predict growth in another, and then, buy shares before others catch on.
No, that sounds like it could stray into tricky territory.
Well, it's crucial to be clear here. Using internal, non-public information to trade stocks, it's insider trading. It's illegal and unethical.
Right.
And BlackRock has faced fines for market manipulation in the past. It's a documented part of their history.
Okay. Beyond the pure financial muscle, what about relationships with governments?
They seem very strong. We mentioned how they've helped the U.S. government during crises, which has undoubtedly cemented those ties.
But it's not just the U.S.
No, not at all. BlackRock also has notably good relationships with the Chinese government. They were actually the first global asset management company allowed direct access to Chinese mutual funds.
That's a significant first.
Very significant. And think about this. Many governments around the world are actually BlackRock's clients.
Governments themselves, how?
Often through pension funds. Governments entrust BlackRock with managing the huge pots of money set aside to pay future retirees.
Wow. So our retirement money could be managed by BlackRock?
It's very possible, even likely for many public pension funds. BlackRock invests that money across different assets, aiming to grow it to ensure those future pension payouts are secure.
So their influence really does touch the bedrock of financial stability for governments worldwide, too.
It seems that way, yes. From individual investors to the largest corporations to national governments.
Okay, so just to recap then, we've really explored BlackRock's immense financial power, the almost unbelievable scale of assets they manage.
That $10 trillion figure just keeps echoing.
It does, and their influence stretching across pretty much every major industry and asset class globally.
And we saw how their strategic growth, navigating those crises,
Right.
and pushing concepts like ESG scores have really cemented their unique, powerful position in the world.
Right. Now, as we wrap up this deep dive, we wanted to leave you with one last kind of fascinating, maybe slightly mind-bending piece of info. It builds on this idea of interconnected power among these huge asset managers.
Oh, this is a good one.
Okay, so we know BlackRock is massive, and they are the largest institutional shareholder, meaning like the biggest company owner of Vanguard. Vanguard is another huge asset management company, maybe number 2 or 3 globally.
Right, so BlackRock owns a big chunk of its competitor, Vanguard.
But here's the twist. At the same time, Vanguard is the largest institutional shareholder of BlackRock.
Wait, say that again?
BlackRock is Vanguard's biggest institutional shareholder, and Vanguard is BlackRock's biggest institutional shareholder.
Wow. So they're each other's biggest owner, essentially.
Oh, yeah.
It's cyclical.
Exactly. It's this intriguing cyclical relationship. It really hints at maybe an even deeper layer of interconnectedness in high finance than we usually think about. Challenges that idea of just one single company at the very top.
It certainly does. It makes you wonder about the implications, doesn't it? This web of intertwined ownership and power. Definitely something to ponder.